Today is Monday, July 8th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Alan, starting with the financial markets this morning, what is the outlook for the stock index futures now that the S&P and NASDAQ futures have advanced to new record highs?
So anytime a market makes new historical highs, there is a tendency for follow-through gains, and I think this time will be no exception. We can expect stock index futures to continue to advance across the board, led by the S&P 500 and the NASDAQ, while the Dow and the Russell that have been laggards will probably advance as well, but probably not as much. So expect higher prices for all the indices, and of course led by the leaders, S&P and NASDAQ.
And looking at the precious metals markets, what are the charts saying about the technical aspects of gold, silver, and copper?
Okay, well, last week gold, silver, and copper futures broke out above major downtrend lines that began in the middle of May. So this suggests that even though there is a little pressure on gold and silver this morning, that the main trend for the precious metals and the copper is higher. And from a fundamental point of view, we have seen strength in the gold linked to flight to quality buying, and silver to a lesser degree, although silver may have been held back a bit due to its industrial component. So these upside breakouts, though, I think suggest higher prices across the board. There's some talk that copper may enjoy some better industrial demand later, which we have not really seen in the last month or so. So I am going with the technicals. Technicals often lead the fundamentals, and they suggest higher for gold, silver, and copper.
Well, we'll wait and see what happens there. Alan, which reports will traders be waiting and watching for this week?
Okay, so it looks like the most important event, or I should say events, will be Fed Chair Powell speaking to congressional committees at 9 o'clock Central Time tomorrow, and then also on Wednesday, essentially providing the same testimony on both events. Thursday, we have June Consumer Price Index. That's expected to be up 0.1%. And then Friday, the June Producer Price Index, also guessed at up 0.1%.
Thanks, Alan. Turning toward the ag markets, Mark, is weather the principal reason for the price weakness in the ag space this morning?
I would say it is, but it's not. But it's not the only reason. Healthy amounts of rain, along with mild temperatures, has been common so far this summer. And yeah, there's definitely been too much rain and flooding in the northwestern Corn Belt. But in the end, I do suspect final acres will come in just a bit below the current USDA projections for both corn and soybeans. For now, yields and production prospects are high. Weather this week will feature a heavy band of rain stemming up the middle part of the country from remnants of Hurricane Beryl, which will bring some relief to some dry areas that have popped up in the eastern Corn Belt. But we do show some heat building here by late this week, particularly for the western Corn Belt, but that's exactly what's needed in the northwestern third following the heavy rains in June. In addition, though, the extended models do show a return to normal to above normal rain for much of the Midwest in week 2 of the outlook. Besides weather, though, overall lack of export demand, I think, is keeping a lid on any rally attempts. New crop corn sales, they're the lowest in 5 years. While in soybeans, you have to go back well over a decade. We still have no new crop sales on the books to China. And right now, commitments are about a third of what they were a year ago. So really, I think we're trying to find out a price level that helps stimulate some better export demand.
Yeah, Mark, what are your expectations for Friday's USDA production report?
I look for no change to the old crop corn and soybean balance sheets, ending stocks remaining at just over 2 billion in corn, 350 million bushels on beans. I don't think the USDA is going to change their yield forecast this month. In the past decade, the USDA has changed yields in July only once. In corn, it happened just a year ago, and in beans, they did lower yields 1 bushel per acre. This is back in 2019. With the updated acres, I see corn production just over 15.1 billion bushels. That's up 240 million from the USDA forecast in June. I expect stocks to swell over 2.3 billion if realized, the highest in 17 years. In beans, I think production is going to drop about 20 million bushels to 4.430 billion. That's just based on the slightly lower acres we got at the end of June, ending stocks falling to just below 440 million bushels. And in wheat, I think winter wheat production is going to jump another 50 million bushels to 1.345 billion. That would be an 8-year high, with total wheat production at 1.943 billion at also an 8-year high.
And Mark, what about globally? Do you expect any significant changes globally from the reports?
Yeah, I think the USDA is still overestimating corn and corn production in Argentina, soybean production in Brazil. I think the USDA will lower that Argentine forecast 3 million metric tons to 50 million metric tons, getting a little bit closer to the Buenos Aires grain exchange. They're at 46.5. And in Brazil, I look for the USDA to cut that forecast, also 3 million metric tons to 150. That getting closer to CONAB's number at just over 147 million metric tons. Other areas to really kind of watch for: hot, dry conditions around the Black Sea. I think we'll trim the Ukrainian production estimates here a little bit. Russian wheat forecasts have been all over the place here in recent weeks. I think the USDA will sit tight this month at 83 million metric tons, and possibly some lower production estimates coming out of the EU and Canada as well.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.